Hi there, welcome to Grain TV. It's Monday, March 28th. We had a mixed day in grains. Let's take a look at the Grain Edge trading platform and see where we closed. In Chicago, corn managed a ½ gain while beans was off 1 cent, and wheat was the leader to the upside, gaining 8 cents, although at one point it was up as much as 13 cents a bushel. News out of the weekend was focused on the wheat weather in the plains, and it was a cold one. Yet again, another weekend with below freezing temperatures and creating a hard freeze in parts of Kansas. If you look at the map here for Kansas, you can see much of the western half of the state below 20 degrees at one point during the weekend. When we look ahead in the following week, we see a warming trend, but then again it gets cold going into Friday for the potential for another hard freeze. That makes at least 3 in the last 2 weeks that we have the potential to be trading here. And we saw wheat really up sharply, again up as much as 13 cents at one point before pulling back about 5 cents of that gain on the close. But I think overall the fundamentals are starting to shape up favorably for wheat in terms of the potential for this crop to be a problem. We have the cold issues. We also have a continued outlook for dryness in the plains. We see no real positive outlook for precipitation going into April in the prominent growing season for hard red winter wheat. So I think this probably keeps this market on an upward swing, at least for the time being. Let's switch gears and talk about export inspections. We saw export inspections for corn topping the analyst expectations, coming in at 977,000 metric tons versus 750 to 950,000 that were expected. Both soybeans and wheat were within analyst expectations. Wheat coming in on the low side and soybeans coming in at the midpoint of the range. Now, as we talk about soybeans, one of the things that has gotten this market excited to the upside in the last 3 weeks has been the strength in the Brazilian real. Today, we saw the Brazilian real gain about 1% after being off at the end of last week. That puts us up about 14% in the last 3 weeks on the economic or the political turmoil that's going on down there. Now, that is having a noticeable impact on our price competitiveness against Brazil. This graph here shows the U.S. and the Brazilian price in a common currency here, the U.S. dollar, and shows how we have stacked up. If you look between our harvest and the later part of February 1st to March, you can see that we were trading at a premium, or Brazil was trading at a discount of $10 to $15 a metric ton over that season. That's kind of converse to what normally happens when we are tending to be the market of choice. So even though we were at a discount, we were able to manage a pretty good export program. But as we switch now to Brazil being the market of choice because of their harvest season going on, what we can see is the change in the Brazilian real, the strength in that, has actually made it more competitive for the U.S. And so now, as we enter that prime selling season for Brazil, we're actually at a discount of $3 a metric ton versus a $10 to $15 premium over Brazil over much of our post-harvest season. So in my mind, that's a very favorable shift for soybeans, and it means we may enhance our export window going forward at a time of the year when we normally expect our exports to be dying off. Now, in terms of technicals, we saw November beans get up to that 926 mark. We've been watching that since the high of last December, and we've been on this sharp tear higher for the last 3 weeks. We touched it overnight, tried to make another run at it in the day session, but managed to close a little bit off of that. So watch that mark, that 926 and a half range on November soybeans, because if we can break through that, then that potentially gives us more upside potential. And I think, in my personal bias, I think there's room for this market to run, given the nature in the Brazilian real that's going to change our export program, probably to the favorable tune of more exports in the coming few months when we normally don't expect that. Looking ahead this week, we have the big USDA reports. On Thursday, March 31st, we will see our first indication of what farmers intend to plant this spring with the spring planting intentions report. We will also have a quarterly stocks report released on Thursday. Stay tuned to Grain TV for the coming days. We'll be following what analysts are saying about those reports and what the market expectations are. If you have any questions about trading or opening up a grain hedge trading account, visit us online at grainhedge.com and learn how we can help you in your grain marketing situation. GrainHedge is pleased to announce a new tool called Technical Alerts. Technical Alerts is free to our trading clients and delivered by email first thing in the morning every trading day. Technical Alerts is a powerful, easy-to-use system that provides quality trading opportunities. Each trading opportunity shows a chart and analysis, providing clear price targets and risk potential to allow you to make an educated trading decision. The commodities covered include grains, livestock, crude oil, currencies, bonds, and metals. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. Let's take a look at how to interpret a technical alert. At the top, you will see a red or green indicator arrow which signifies the market's likely move. Red shows when weaker prices are expected, and green for when higher prices are expected. The summary section shows the expected price target and the expected duration it should take to reach the target. Also, Technical Alerts provides both support and resistance to help you identify key levels on the price chart. Underlying support is where technicians believe there is a level of buying interest, while overhead resistance is the price level thought to trigger more active selling. The support is marked with the letter A on the corresponding price chart, and resistance is marked with the letter B. Below the chart, you will see the data interval of the bars. For example, a 1-hour data interval means the chart pattern was constructed from a 1-hour bar chart. And when you are using the Grain Hedge trading platform, you can use the pull down on your chart to change the bar interval to the appropriate time period. As always, we strive to provide you the best tools to improve your trading and hedging activity. If you have any questions on how to use Technical Alerts, please contact us at 877-472-4607 or by email at support@grainhedge.com.